So I'm really happy to be here. I have a lot of material. I have perhaps too many slides, but we'll try to go through them all, because I like to provide, as much information as possible, and also kind of practical information. And international business, particularly importing, but I guess exporting as well, is a little bit, it's a bit complicated sometimes, or it's also very detailed oriented, like a small detail in your process, a little piece of information missing, or a document missing, or some data that's wrong or incorrect, and can sort of create problems and additional costs. So it's very detailed oriented. So that's why I have many slides. I'll try to introduce you to as many practical details as possible. So it's just an overview, really. We can't really go into specific details because we don't really have the time. So anyway, I'm trying to give you as good as possible, as wide, as broad as possible, a picture of what we need to know when we want to import goods. And I'm really happy to do that.
Christian, sorry for the interruption. Just Jessica's gonna mention about the questions. I forgot to say
yes,
that at the beginning. Sorry
absolutely.
for that.
Yes, no worries.
Hello, everyone. Thank you for joining us for this event. And if you would like to ask something relevant about now the webinar we're about to start, please, I'm going to send you a link where you can ask your questions. And at the end of the meeting, we will be reading those questions in order of appearance. Well, I hope you enjoy the workshop. Thank you.
All right, thank you for clarifying this, Jessica. And then, so I hope, yes, I'm going to try to go through my presentation as fast as possible, so we have time for questions at the end, especially if some of you have class at once. So first, before I start, I just want to mention why the reason for my screen, the backdrop of my screen actually is because it reflects the colors of the Ukrainian flag. And so I'm still totally shocked of this invasion of Ukraine by Russia, and I stand 100% with Ukraine. So this is my brief message in support of people who are getting bombed every day, civilians, and have been so since February 24, and it doesn't look like it's going to stop anytime soon, especially because there are so many countries that support Russia, unfortunately. So that's the reason for the colors I have chosen for my slides, if you were curious about that. So I don't need to spend any time on this because Perla introduced me already. And so, but briefly, I just want to say, if you're interested in international trade, importing, exporting, supply chain management, Inside Logistics and Supply Professional are great publications. They're online and they're available, easily available and free. You can subscribe to a weekly newsletter, and you can even subscribe to a paper version of they still make paper magazines every 2 months. So they're great sources of information. And it's not because I publish articles there, it's because they are great sources of information. So we're going to talk about importing. So just to give the a broad picture of our import scene here in Canada, we import a little bit over half of our whatever we import from the US. So the US is by far our main trading partner. As you know, or you may know, 3/4 of our exports go to the US. So 3/4 of our exports go to the US, and a little bit over half of our imports come from the US. So that highlights how important the relationship is, for Canada. Now, the official figures show that China is the second largest trading partner of Canada, which is not completely correct, actually. And that's because if you consider the European Union as an entity, European countries, so the European Union and the UK, it's a little over 13%, and it's also on the export side, our second export market after the US. So I just want to make that little statement or mention here just for information. And so the first practical step you need to do when you want to start importing goods in Canada is you have to, first, when you want to do any business, you have to have a business number. You have to register your business and create a company. So that's just to start a business, whatever the business is. And then when you decide to do importing or exporting, so international business, then you have to call the Canada Revenue Agency so that they link your business number with import and export activities. So then you get a designator, an RM designator, which is basically your company number, the registration number, and then RM means it's going to be doing international business. So that's the first practical step to take when you start bringing goods into Canada this way. I mean, if you don't have an important number, then they'll be stuck at the border until you have this thing set up. So it's going to be inconvenient. And so what do we do with that? Well, just to show you an example, this is the example of a classic import customs form. It's called a B3. And so when anything comes into Canada, and I'll go into these details, a little bit later, but just to show you an example here, a customs form is to be filled out so that the goods then are declared to customs, and then customs will release them, and then you can pick up your shipment at the port or at the airport, or the trucker can deliver it to you from the border or whatnot. And so anything that comes into your company's name, whether it's coming at the port, at the airport, or at the land border, is going to automatically be identifying or linked to your importer number, you see. So every transaction into Canada or even out of Canada, your business number will be identified as an importer or exporter number. So this is just to show you where it goes for information. So now, as far as I said earlier that importing or exporting, but particularly importing are very interesting activities, but you have to know kind of a lot of details of different things. So I'll try to go over the main ones that we should be informed about. And so one of the things that we should learn, and actually I don't know if at the college, maybe Parla or Jessica can tell me if you study Incoterms in class. So probably you do, but do you?
Well, not sure. We have
Okay.
I think we have some subjects that are electives that might talk about that related to international business.
Okay.
Right now, not pretty sure. I think something like detailed, not.
Okay, good. So you see, so that's one of the important things to be familiar with when you do importing or exporting. There's something called Incoterms, which is the abbreviation of International Commercial Terms. So there are international rules. They come in a book that's published like this, that's updated every 10 years or so. And what this contains is different rules that we call Incoterms that define the responsibilities of the seller and of the buyer. So basically these rules, and there's 11 of them. So like you have 11 options in there. So 11 choices, and then depending on which one you select, it will say that the exporter has to do this and that, and the importer has to do that. And so it basically it defines the obligations of the parties. It says who is going to arrange the shipment, the delivery, the logistics, up to where, and there's various options, various choices. So it's related to who delivers the merchandise and up to where, and who pays those costs. Are these costs paid by the importer or by the exporter? I mean, if the costs are paid by the exporter, it means that the exporter includes these costs in his invoice, right? I mean, these costs, they exist anyway, but so the issue is who pays for them, who arranges what, who pays for what. And why is that important? Because it's an important element of competitiveness. It's also an important element to prevent disputes, you know, with between sellers and buyers. Because if we don't have the same understanding as to who does what, who pays for what, well then when something goes wrong, then there would often be a dispute, because then, you know, that's how it is sometimes, right? Whereas if you use Incoterms, then they define precisely who pays for what, who's responsible for what. And so when something goes wrong, then it's easier to sort it out, because it's well defined as to who has what responsibility. So there's 11 Incoterms. There's 4 on the left. There's the 4 Incoterms that are reserved for maritime shipments. And then there's the 7 Incoterms on the right that are used for multimodal shipments, i.e. truck, rail, air, as well as ocean containers. So we tend to use more the ones on the right side, even for maritime shipments by containers. The ones on the left are more reserved for maritime shipments that are not containerized, you know. So that's what they look like. And so why are they important, and why they are sometimes tricky? And so here's an example of why or where we want to see them. We want to, when you import goods, you're going to get prices from suppliers, and then you're going to want to compare prices maybe with different suppliers, maybe with different suppliers in different countries. So if you use the same Incoterm, you know, from different suppliers, then you'll be able to compare precisely with the same terms of reference. To make a true comparisons between several suppliers, then you should have the same Incoterms for all suppliers. And then once the goods arrive, then this is an example of a commercial invoice, just for the sake that I created, just to illustrate what we do with Incoterms. So you see, once an Incoterm has been decided or agreed between 2 parties, and so first of all, Incoterms are a 3-letter abbreviation. So here the Incoterm is CIP. So it has a precise meaning as to what it means, what it includes, and so on. And so when you have that near a price, it tells you exactly who is responsible for what part of the cost. And therefore, it's less likely to be that there will be a dispute between the parties, you know, if something happens to the goods in the process. And so you want to have the Incoterm as soon as you start talking about a price with a supplier. You want to have an Incoterm attached to it, because it will tell you what is included in the price and what is not included. So then you can do a calculation of what your final costs are going to be. And why they're useful as well is because, you see, that's a commercial invoice, so that's used to go through customs. Usually, not usually, but you always have to provide a commercial invoice to customs when goods come in. And so if the Incoterm is mentioned on the commercial invoice, then next to the price, then it informs the freight forwarder, the broker, the transport company, and the customs office as to what is included in the price and what is not included. So who pays for, you know, additional costs, who pays for customs duties and taxes, local delivery, et cetera, et cetera. So this is why it's very useful to have Incoterms well defined and agreed between the parties. So I said a moment ago this, and before ending this, I just want to say that this is a book that that you have to purchase, you know, like once you do international business, you want to be informed of Incoterms, you have to purchase that. Unfortunately, it's not free. You have to get it from the International Chamber of Commerce. I could send you the link if you're interested. So I said Incoterms define the sharing of costs, or the transfer of costs, or the division of costs between the parties, between the seller and the buyer. The other thing it does is it defines the risks also. The risk, at what time does the risk move from the seller to the buyer? So in practical terms, what it means is if there's a container that is lost on the way because of this tragedy of this vessel, this Rena vessel that was off the coast of New Zealand a few years ago. So the question that the Incoterm defines also is, whose loss is this? You know, when the container is lost, is it the buyer's loss or is it the seller's loss? So that's what the Incoterm defines. And so you could say to yourself, well, it should be pretty easy. whoever paid for the freight, is the one who has lost the container, right? So it could be tied to who organized the freight and who paid for the freight, but actually that would be too simple. And unfortunately, there's 4 Incoterms out of the 11 Incoterms where the sharing of the risks is not the same as the sharing of the costs. So I don't want to make this overly complicated, but just remember that this is a very important point when you're doing importing. When you're doing exporting, it's not so important, but when you're doing importing, you want to be sure that you have a good handle on the risks, and that depends on the Incoterm that you use. For some Incoterms, the way risks are shifted from the seller to the buyer is not logical. It's counterintuitive. So that's enough said about Incoterms, because even though it's still early in the day, if I continue to talk about this, some of you are going to fall asleep or are going to leave. So another interesting thing to know, a technical thing to know about, is in respects to payments. When you start buying goods on a commercial basis, quite often the supplier will, because the supplier doesn't know you, or because you're new to the business, you don't have a very good credit record. So sometimes the supplier will say, okay, I'll sell you these goods, but I want you to pay me in advance. And so that is what most exporters will say when they start doing new business, when they deal with new customers. So on your side, what you would like to do is you would like to have credit from the supplier. You would like to be able to tell your supplier, okay, send me the goods and then I'll pay you after. And that doesn't happen very often, because then that's dangerous for the seller. And so one solution on the international for international trade for importing is to use what's called a letter of credit, a documentary credit. So I don't want to bore you about that, because that's again a bit technical. I just want you to know that it exists. It's a bank instrument that is well defined, that has international rules that explain how this works. And so what that means is that because there's international rules, I forgot to say earlier, the Incoterms, they're international rules. So that means it doesn't matter which country you deal with, or, they apply everywhere in the world. So this is the same for letters of credit or documentary credits. It's something that applies everywhere in the world. It doesn't matter which country you deal with or which bank you deal with. It's a way to avoid having to pay suppliers in advance. What you do is you put the money aside at the bank, and then the bank communicates with the supplier. And then as soon as the supplier sends the goods, then the bank pays the supplier. So it's a way to secure both the buyer and the seller when it comes to payments. And it's a way for importers, for buyers, to avoid having to pay for goods in advance. So it's an interesting tool to know about. Now, I want to touch a little bit on logistics issues. And of course, it's the main 2 elements of success when you're importing products is to be familiar with the process and the regulations and the rules, and to avoid, so that you can calculate your cost well, and so that your goods also are not stuck at customs. The other important part is the shipping cost. What is it going to cost you to get your goods over? And so logistics is an important part of success. So two categories of companies can help you, so can be your partners. One is CIFA, the Canadian International Freight Forwarders Association, and so it's the association to which most Canadian freight forwarders belong. And so the idea here is to let you know that that association, first of all, has a lot of useful information on its website about importing and exporting, but also it has a list of freight forwarders that you can sort, you can look for, and it's freely accessible. So when you want to start working on your shipping arrangements and you want to get some prices, for example, shipping prices and this and that, it's good to be able to communicate with several freight forwarders and see which one is the best. And so one place to look for that is on the CIFA website. Then you have a list of freight forwarders by province and by city. So if you're looking for freight forwarders in BC, you'll find them in there, or in Toronto, or in Richmond. And so that's CIFA. That's one association that will lead you to useful people who will be able to help you. And then the other one is called the Canadian Society of Customs Brokers. So that is similar to CIFA. CIFA deals with freight forwarders. It means companies that organize shipments. CSCB, Canadian Society of Customs Brokers, it's the association of people who do customs formality, who will do customs clearance on your behalf. So it's a different association for legal reasons, but in reality, many freight forwarders will also do customs business, and many customs brokers will also do shipping business. It just so happens that there's two associations, and they don't compete against each other, but they have mainly the same members. Like many companies in this field are members of both associations. One is primarily for shipping and one is primarily for customs work. So that's why there's two. I'll touch briefly on shipping modes just to give you a little bit of info, and then the important point is the last one, and we'll look at that in details about something called carriers' limits of liability. So briefly, if you bring goods in from Mexico or from the US that you'll try to move, then you'll want to move them by land, by truck most of the time. So it's good to be familiar with the language, some of the language. So if you're bringing a whole load of products from Mexico or the US, and in shipping terms in the industry, it's called an FTL, a full trailer load. And so there's mid-sized trailers, there's large trailers. You're going to pay by trailer, whether the trailer, whether the truck is full or not, you'll pay a price for each voyage, so to speak. And then if you only have a few boxes, a few crates, a few pallets, then in the trucking industry, it's called LTL, less than trailer load. It means your shipment is going to be consolidated and handled probably several times. And that's just to make you familiar with terms. Now, if you're moving goods by ocean freight, if you're bringing some containers from Latin America or Asia or Europe or Australia or wherever you want, if you're bringing a whole container, a small one is 20 feet in length, a big one is 40 feet in length, and you'll pay the price per container, even if your container is half empty. It's not going to matter. It's a price per container per voyage, for each trip. Now, if you're bringing a small shipment, it's going to be consolidated with other shipments, then that's called an LCL, a less than container load. So it's just to say that, when you call a freight forwarder and you say, I want to bring goods in from Mumbai in India, then the question is, one of the first questions the freight forwarder will ask you is, okay, is it an FCL or is it an LCL? I hear you bring a whole container load, or you bring a small shipment that's going to be consolidated with other shipments. So then if it's a small shipment, it works well, it can be done, but it takes a little longer, and it's a slightly different gymnastics, shall we say. So that's the terminology that people use. And for air shipments, what I want to bring to your attention is the fact that prices for air freight, for air shipments, vary a lot whether you have a small shipment or a large shipment. So I just want to give you an idea here. I call that the rates are on a scale, So if you have a small shipment of 20 kilos to bring in from Singapore by air, then if it's 20 kilos, maybe it's going to cost you $15 or $20. But then if it's a shipment of 100 kilos, then it might only cost you $10 a kilo. And then if it's a big shipment of 1,000 kilo, then it might only cost you $5 a kilo. By air, it's important to try to consolidate shipments, because prices vary a lot depending on whether you have a small shipment or a mid-sized shipment or a large shipment, which is not the case in ocean freight. In ocean freight, prices are pretty well very close, whether you have one container or 10 containers, for example, or whether you have one pallet or 5 pallets, the prices are very similar. But in air, they vary quite a bit. So, and so here I want to talk to you about something that is, again, a bit technical, but it's very important to be aware of this. And so I call that risk management, which we could call also cargo insurance. And so why is it important when you do importing? Why is it important to have cargo insurance? Is yes, you want to have to be compensated. So if something happens during the shipment, right? Like we saw the vessel that broke in two. Luckily, it doesn't happen very often, but when it happens, you want to be compensated. And so the best way to be compensated is if you have good insurance called cargo insurance. And so you have to include that in your process, and you also have to include that in your cost calculation. You don't just need shipping costs, to see how much is it going to cost. How much is it going to cost me to bring that product that I want to bring in? Well, you have to look at the shipping costs. You also have to look into the insurance costs, because you should always have insurance on your shipments. And so, and why is it extremely important? And I'm going to mention that on the next slide, is because carriers have limits of liability. So what that means is that if the shipping company loses your container because your container fell in the water, or because it had an accident, or if a trailer that you brought in from the US gets stolen, or some crates that you brought in by air or whatnot got damaged by a forklift at the port or at the airport or at the truck terminal or whatever. Carriers, whether they're truckers or ocean lines or airlines, will never pay you the value of your goods. This is the thing. And that's because they have limits of liability that are contained on the terms and conditions, and that you cannot negotiate because they are automatically part of the shipping contract. So you have to look at the fine print on the shipping contract. It always has restrictive conditions that say that the carrier is only responsible up to a certain amount. And so there are things that happen sometimes. You remember the picture of the Rena vessel that's broken two off the coast of New Zealand. That's quite a while ago. Last October, we had a vessel that was coming from Asia and that lost many containers due to a fire. That was off. That happened off the coast of BC. The Zim Kingston was the name of the vessel. You may have heard about it at the time. So these things happen, unfortunately. And you probably read about this thing about a year or so ago. This container ship that got stuck in the middle of the Suez Canal for 1 week. So these things happen. I'd like to mention here, just in passing, and that's why I have the picture, is to remind myself to tell you, cargo insurance only covers you if there's some damage, if something happens to your goods. If your goods are delayed somewhere, just like if you had goods on this Evergreen vessel in the Suez Canal that got delayed but not damaged and not, you cannot take insurance against that. Like no insurance company will cover you for delays. So insurance only covers you for damages or for something missing or something that was stolen. If something arrives 6 months later, you can't collect anything from the insurance company. So the real information I wanted to share with you is this. I talked about these carriers' limits of liability. And so that's what they are. If you have a shipment moving by truck in Canada, the maximum liability of the trucking company is $4.41 per kilo. In the US, it's lower. If Air Canada or Cathay Pacific lose your boxes that you're shipping by air, or if they get stolen or damaged, the maximum you'll get from the airline is between $30 and $40 per kilo. And if your container falls in the water, or if it's stolen, then the maximum you'll get from the ocean line is between $500 and $900 per container. So that's the thing to be aware of. When you do international business, you could think that if the ocean line or the airline loses your shipment, or if your shipment gets stolen or gets damaged, that you could think that the carrier will reimburse you, but it's not the case at all. The carrier will only pay you a fraction of the value of your goods, unless you have very low value goods, of course. If you have very low value goods, then if they are below the liability limit, then you're okay. But so that's the thing to keep in mind. don't imagine that, and that applies also to FedEx or UPS. If you send goods by courier, they'll never reimburse you the value of your goods. They'll only reimburse you up to a maximum amount that's contained in their terms and conditions. That's why I call it the fine print, because the terms and conditions are very long and very hard to read sometimes. But that's where they would have that information. Now, how does insurance work? If you have no insurance, then you make a claim against FedEx or UPS or Air Canada or Maersk or the trucking company, and then they say to you, okay, I'm responsible. It's my fault. I lost your shipment, or your container fell in the water. But my maximum liability, if you read my contract, my shipping contract, is $500 per container. So here's my check for $500. So if you have $50,000 of goods in a container and the container falls in the water, the carrier will say, yes, I admit it's my fault. I lost your container. It fell in the water. I'm 100% responsible for it. It's my fault. But I'm only going to give you a check for $500 because that's what the contract says. That's the terms and conditions. So that's the thing to keep in mind. Whereas if you have cargo insurance, then the way it works is that you go to the insurance company, ahead of time to purchase insurance. And then when something happens, then you claim against the insurance, and the insurance pays you automatically, providing you can provide the proper documentation, of course. And then they pay you right away. They send you a check for the full value of your goods, and then they claim against the carrier. Then they go after the port or the Air Canada or the ocean line or the trucking company. So that's how insurance works. And now, this is technical, but this is just to say that it doesn't matter which insurance company you deal with. When you talk about cargo insurance, it doesn't matter which country you're in. There's international clauses that are applied pretty well everywhere in the world. And so it's useful to know about that and to become familiar with them, because A is a good insurance, more or less insures you more or less against all risks, whereas C is a very limited type of insurance that covers you only for in case of total loss, for example. And so why is that important? Because depending on the product you're sending, you may want to have a very good insurance, or you may prefer to have a limited insurance. And then the impact is on the cost. Clause A is better, but it's more expensive. Clause C is not as good, but it's cheaper. So just the kinds of things you should try to become familiar with when you calculate your risk and try to protect yourself against risk, and to do a good assessment of what your options are is useful. And very briefly, to end on insurance, I just want to say that, yes, there's some statistics that are done that are kind of useful. They show that what the main causes of claims are, which is fine. But the thing I want to bring to your attention is the last one, inadequate packaging. So what that tells us is that in about 10% of cases, claims, damages are caused by inadequate packaging. So it means that two things. It means we have to think about having proper packaging on our goods, and we have to request that from the supplier, of course, from the exporter. It also means that if it's proven that the damage was caused by inadequate packaging, what do you think the insurance company will say? The insurance company will say, I don't pay you, because the claim was your fault, because your goods were not well packaged, were not sufficiently well protected. So that's the other message I wanted to share with you. If goods, in 10% of cases, claims are not refunded, are not paid because of inadequate packaging. So just something to remind us of the importance of that. Since we're talking about packaging, I want to tell you something very briefly that's very boring but important. There's international rules for wood packaging material. So when you send goods, particularly by ocean freight, then if you use pallets, or if your supplier uses pallets or crates or whatnot, they have to use wood that has been treated that's to prevent the infestation of pests. So if you're dealing with an experienced exporter overseas, then that's good, because they probably know that. But if you're dealing with somebody who doesn't do much international business, then he or she may not be aware of that. And so if goods come into Canada and wood packaging material has not been treated, the Canadian government will not let them into Canada. It's prohibited to bring goods in that are packed in wood that has not been treated. And so there's only one exception to that. So for your information is with the US. So when you bring goods in from the US, providing the wood is American, it does not have to be treated. But from anywhere else around the world, the wood has to be treated and customs check that. And your goods will just be, they will not be allowed into Canada. They'll just be shipped back to where they came from. So now I want to try to go quickly through the customs issues because I see time flies. And I want to have a bit of time for questions. So let me try to zip through that very quickly. So customs is important. Funny thing is that the customs agency in Canada is not called customs. It's called the Canada Border Services Agency. It used to be called the Canada Customs and Revenue Agency. Now it's called the Canada Border Services Agency. So when we refer to customs issues, it's the CBSA that deals with them. Now, depending on what you bring in, so anything that comes into Canada has to go through CBSA, has to go through customs. But depending on what type of product, you may have to deal with another government agency. So for food, for example, it's going to be the Canadian Food Inspection Agency. Goods that are subject to import permits, it will be Global Affairs. So you have to do the research before you bring goods in. You have to do the research to see, okay, what government agencies am I going to have to deal with? You know, what permits am I going to need, et cetera, et cetera. And so just to give you an idea of what that means or what agencies could be involved. For example, the one we'll come across the most is the Canadian Food Inspection Agency, CFIA. So for all food products, but also for plant materials, it'll be involved. Global Affairs will be involved in goods that require import permits. So if you're bringing certain foods for which there's import permits, you're going to have to deal with 3 agencies: CBSA for customs, CFIA because they administer all foods, and Global Affairs because they administer import permits. So you see, that's the kind of thing where we need to do a bit of research ahead of time to be sure that we all know what is needed. Now, to get your goods into the country, what you'll need is a document or a data from the carrier, like the airline, the ocean line, the trucking company. They issue what's called a cargo control document, and then you have to supply it to the government, either either yourself as importer or through a customs broker who will represent you with CBSA. And very often Canadian importers use customs brokers to do the customs clearance for them. And so you'll need the invoice from your supplier overseas, from the seller. You'll need a packing list. You'll need a certificate of origin, depending on the case. The import declaration is called the B3. That's what the customs broker will do for you. And you have to fulfill requirements of other government agencies. So as I said earlier, if you have food, it's going to involve the Canadian Food Inspection Agency. So you have to do a declaration to them, you or your customs broker. So it's very important to do this work in advance so that we know what will be required, so our goods are not stuck at customs when they come in. Very briefly, to look a little bit at the information that's important to go through customs quickly, smoothly, and also to avoid penalties or things like this. We have to have a good product description on our documents, on our commercial invoice. We need to be familiar a little bit also with the tariff classification, the HS code. And I'll touch on origin and intellectual property and import permits on the next slide. So product description, it's your responsibility as the importer to know exactly what it is that you're bringing into the country. You know, if you're bringing rubber boots and actually they're not made of rubber, they're made of plastic, and, you know, customs find out, you can't say, well, I didn't know they were made of plastic. I thought they were made of rubber. You're supposed to know what you bring in. So it's not a defense to say, I didn't know. So you're responsible to make proper declarations of what it is that you bring in, what is it made, and what is the HS code, and etc. Now, you're not alone doing that because customs brokers will help you determine that. But it's important to realize that it's your responsibility. Ultimately, the customs broker will help you, but on the transaction is going to be made in your name, and it's going to be your importer number on the document. So if there's penalties because of a misdeclaration, it's not going to the customs broker, it's going to you because you're the importer and you're identified with your importer number. So now you see why what I told you at the beginning, you see what happens with the importer number. It ties every transaction to you or to your company. So the HS code, this is something technical. Customs brokers will help you deal with that. And so what it means is that anything that's shipped around the world, imported, exporting, has a product code, that is used by customs authorities around the world to classify the product. So it's a numbering system that's issued by the World Customs Organization in Brussels. It's a 10-digit number. And there's a 10-digit number for cotton t-shirts, and a 10-digit number for rubber boots, and a 10-digit number for chocolate bars. Every product has its HS code for customs declaration. So where do you find it? You find it in the Canadian Customs Tariff on the CBSA website. And so the HS code has 99 chapters, and it starts at the beginning. At the beginning of the numbering system, there are unprocessed natural products. For example, live animals are in chapter 1, and then hides would be in chapter 41, so semi-processed products. And then in chapter 94, you find leather seats. So the more a product is manufactured, the later it is in the numbering system of the 99 chapters of the HS code. So just to give you a glimpse of it. And where does your HS code go? Well, it goes on the import declaration that the broker is going to prepare for you. So you see, it's called classification number on the customs document. And this is going to be the basis of the duties that are going to be paid, based on the rate of duty, which is usually a percentage of the value of your product, and based also on the tariff treatment. So it's an important question for conformity. Make sure that the correct HS code is used, the correct value, et cetera, et cetera. And it's also how you would calculate your costs ahead of time by determining the HS code, by looking up in the customs tariff what is the rate of duty for that product. And that depends on something called the tariff treatment, which I will show you in one moment. So important information to know about when we do importing. Also, you have to be sure that what you bring in is not counterfeit goods or contraband. If you're bringing in Louis Vuitton bags, they have to be real Louis Vuitton bags, not fake. If they're fake, then they're going to be blocked by customs, they're going to be seized, and you're going to get penalties. You also have to know, of course, all the rules for labeling products and so that's detailed. That depends on the type of products that you're going to bring in. So you have to do this research ahead of time. So there's some things that are common to all products, like the country of origin, like the bilingual labeling, Captain Crunch, everything that's being sold on the retail level in Canada has to be bilingual, French, English. And then there's specific rules for specific products. If you're bringing garments, apparel, bedding, you have to have a specific label for that. If you're bringing food, you have to have the list of ingredients. You also have to have the list of nutritional facts. So every type of product will have specific rules that you need to look into. And that's the kind of information that's going to be checked when the goods come in. They're going to be checked by CBSA or CFIA or, the agency involved. Now, briefly on country of origin, what I want to say is that when you bring good, if you bought a pallet of New York Yankees hats from a company in New York, right? And then you want to sell it maybe at the market or at the beach, which could be a legitimate business, right? Why not? So the fact that you bought these hats from a company in New York or in the US, it doesn't mean that it's a US product. See, if the hat was made in China originally, and then maybe a company in New York just added the letters NY. The hat is still Chinese because it was made in China. So it's something to keep in mind. What you buy, where you buy your product is not necessarily the origin of the product in terms of customs. If you bought a T-shirt from a company in the US, with the Washington State image printed in the front, if the T-shirt was made in Bangladesh, even though you bought it from a company in Washington State, it's still a product from Bangladesh in terms of customs. So something to keep in mind when you do your import declaration. I touched a little bit about import permits earlier. So it's good to be familiar with whether your shipments or your goods need import permits. So some food products require import permits, some textiles. And so where to look for that is on the Global Affairs website. Just type in import controls, and then it will bring you to the page. It will tell you exactly which products require an import permit and what the process is for getting that. Now, I want to touch briefly on certain food products to make you aware of the fact that in Canada, we have restrictions. We have something called a supply management system, which means that to protect our farms, to protect our farmers, dairy products like milk, yogurt, cheese, poultry like chicken meat or turkey, and egg products are restricted. So if you're planning to import any of these products, it's going to be very complex because there's limits on imports. You need to apply for import permits in advance, and it's generally not very easy to bring in any of these types of products in Canada because of restrictions, because of our supply management system, whereby we want to protect where we want to have to be, what it is basically is we want to be self-sufficient. So we want to protect our farms that produce these items by making the importing of these products either difficult or expensive. So that's just in passing. Now, since we're into food, I touched earlier on something on the government agency that regulates food. It's called the Canadian Food Inspection Agency. And I want you to keep in mind that there's a relatively new set of regulations that were issued by the Canadian Food Inspection Agency. It's called the Safe Food for Canadian Regulation. So SFC is the initial. So what it means is that because of these new rules, if you want to bring in any food products in Canada, you have to have a license issued by the CFIA. It's called an SFC license. So it's something relatively new, and it would also apply on, we talked about poultry earlier and dairy. It would be also applied to that. So remember, any food you want to bring in, there's a specific process now whereby you need to have a license ahead of time. And so it's an additional step that did not exist before. So I want to make you aware of it briefly. Next, I want to talk to you about the thresholds for customs. Just for information, it's not a big deal because you see we have a duty and tax exemption of only $20. So it's not a big deal because if you import commercial goods, for sure you're going to bring in more than $20, right? Otherwise, it's not worthwhile. But so just for your information, anything below $20 is duty-free. Exception, if it comes from Mexico or the US, then it's $40 GST-free and $150 duty-free. Now, $3,300 is the next limit. I just want to tell you about that briefly. Don't worry about it too much. All I want to say is that if you bring in goods that are below $3,300, it's called a low-value shipment. It is going to go a little bit faster, and but it's not really a big deal. It's just to be complete. I wouldn't worry about that too much. The main thing to know about, I think, is the duty and tax amounts. Duty exemptions, duty and tax exemptions. It's good to know. Now, a key to importing products is to figure out how much is going to cost on customs duties or tariffs. So how do you find that out? How do you figure that out? You go and look it up on the CBSA website. you look for the customs tariff. And so the customs tariff is organized. You see at the bottom, I couldn't fit everything on the screen, but you see at the bottom, chapter 1, live animals, chapter 2, meat. So that's the 99 chapters of the HS code that you're going to find there. So you can go into chapter 1 to chapter 99 once you know in which chapter your goods are. And then you get to your HS code, and then you're going to find the information. You're going to find something like this that looks impossible to understand at first, but let's break it down. It's very easy. It's based on chapters and descriptions. So most footwear is is under number 6401, and then footwear that has a protective metal toe cap is in 640110. So it's all broken down depending on what the product is. And so if your footwear that has a metal toe cap is made of rubber, that's the HS code for it on the left. If it's not made of rubber, it's the second HS code. And if it's made of plastic, then it's the third one, 64.110.20.00. So you see, it all looks very complex, but it's really just broken down, and you have to find your right product. And then on the important information is on the right-hand side, you have the normal rate of customs duties, the normal tariff, which is 20% here in this case. For all these products, it's all the same. And the tricky part is the column on the right-hand side, because you'll find initials that are totally impossible to understand, and unless you have done a little bit of research. So that refers, the right-hand column refers to developing countries, like LDCT. If you see LDCT on the first line, the abbreviation, it means least developed country tariff. It means if you bring goods from developing countries, the goods come in duty free. That's what when it says free, it means duty free. If you on the last abbreviation in these groups of abbreviations, CPTPT, that refers to a free trade agreement, the Trans-Pacific Partnership, of which Japan, Singapore, Vietnam, etc. are part. So if you bring goods in from any of these countries, then it's also duty-free. That's what these funny abbreviations on the right-hand side mean. Now, when you bring goods in from developing country, you need a special certificate of origin. That's something important. So if you bring t-shirt or garments from Bangladesh, they are considered a developing country. You have to tell the supplier, I need the GSP certificate, Form A. You need that. You need to present that to customs. Otherwise, you will pay the 20%. Otherwise, it won't be duty-free if you don't have the GSP certificate. Same with free trade agreements, countries with which we have a free trade agreement. So the US and Mexico, you need to have the certificate of origin from the supplier, and you have to show it to customs so that customs allow the goods in duty-free. And so we have the free trade agreement, the former NAFTA, which is now called CUSMA in the US, or TMEC in Mexico. That's for the US and Mexico. And then we have other free trade agreements with all kinds of countries, small countries, except the last two at the end. These are big countries, or big groups of countries. There's the one with the European Union, which is 27 countries, and the Trans-Pacific Partnership I was just referring to earlier, which covers Japan, Vietnam, Australia, New Zealand, Singapore, etc. So when you bring goods in from any of these countries, in order to get the 0%, you need a specific certificate of origin, and each free trade agreement has a specific document. So for example, if you bring goods in from Korea, we have a free trade agreement with Korea. You need to present to CBSA the Korea certificate of origin, and that is required. Then you have to ask your supplier in Korea to prepare the document and send it to you. If it was coming from Mexico, it would be the TMEC certificate of origin. If it was coming from the European Union, it would be the European Union certificate of origin. So it's a detail, but that's necessary to get the full benefits of the free trade agreement. Now, last point, and then we're almost done. So how to calculate the duty. So you see there's a percentage of duty. So we saw in some cases 20%. For many products, it's less than that. For some products, it could be 5% or 3% or 8%. So just to calculate it, if you need to calculate it to anticipate your costs well, keep in mind it's based on Canadian dollars, of course. If you bring goods in from a country that is using US dollars or rupees or whatnot, you have to convert it in Canadian dollars, and then the percentage of duties that applies to the value in Canadian dollars. And then the GST, the funny thing about the GST, you know, we pay GST on imports, the GST of 5%. We don't pay HST, we pay GST. And then it's calculated on the value of the goods plus on the duties. So if you want to calculate how much you're going to pay on your shipment, you look up the rate of duty, and let's say it's 20%. So you take the value of your goods times 20%. So that's the amount that you get for duties. Now, to calculate the GST, you add the value of the goods and you add the GST, and then you add the duties, and then you calculate the GST at 5%. And so last thing, how do we know what the rate of duty is? I showed it to you and earlier. There's the standard rate of duty, also called the MFN rate, and there's some countries have a preferred duty rate, and then there's developing countries, and then there's free trade agreement countries. Now, how do I know for sure where? So that's the abbreviations on the right-hand side. So how do we know for sure that how do we know that Bangladesh is a least developed country, right? Well, then for that, you have to look elsewhere. It's not all in the same spot, otherwise it would be too easy. So you look for the list of countries and the applicable tariff treatments. And then you will see that Bangladesh is an LDCT country. You see the X at the bottom. So that means least developed country tariff. That means if you bring goods in from Bangladesh, as long as you have the certificate of origin on a specific form, you'll pay 0% duties. If you don't have the certificate, the GSP certificate, your goods will still come in, but you'll pay the 20% standard rate. Very briefly also, you have to realize that there's anti-dumping duties on some products, and it could affect you big time, because sometimes the anti-dumping duties can be 50% or 100%, you know. And so how to know if my products are going to have anti-dumping duties is very easy. Go on the CBSA website, anti-dumping and countervailing duties, measures in force. So measures in force, if you click on that, it will show you exactly which products have anti-dumping duties, from which products from which countries, and what the anti-dumping duty percentage is. And then the second line, investigations, it will tell you which types of products are being investigated, which means that there may be anti-dumping duties soon on these products. So it's important to know. It's important for you to know, because you want to have and do a good cost calculation ahead of time. You don't want to have a surprise, bring a container of goods and then find out that you have to pay 100% anti-dumping duties on your container of furniture that is coming from Vietnam. And last one, on the technical side again, there's something called CARM, an initiative, a change in the way to do business with the customs, with the CBSA, is called CARM. And so under that process that started in 2021, but that has been postponed to January 2023, importers are going to have an additional step, which is going to be to open an account with the CBSA and to provide a financial security, a security deposit. So it's also a step to be aware of. And this is something new. So it's good to be familiar with the letters CARM, CARM. It's something new that in theory is going to make things easier for importers, but in practice, when it starts, it's going to be a mess for a few weeks, if not a few months. And so it's good to be aware of that ahead of time and to look into it and be prepared for it. And so I'm sorry we ran out of time. I talked too much. I'm sorry we don't have much time for questions now. But as I said, I hope it was interesting and informative, and I'd really be happy to, and have the time that we need to answer questions. I hope that some of you at least can stay and we can exchange together and we can discuss things, and I'll be happy to answer your questions. So for that, I'd like to pass the microphone over to Perla and Jessica. So thank you so much for your attention. I hope this was interesting, and I'll be happy to exchange with you.
Thank
Yeah.
you, Christian. Yeah, that was very interesting. So Jessica's gonna share her screen.
Yes.
So she's gonna share the questions. She's gonna read it and to make it a little bit easier. Thank you.
Yes, thank you very much, Christian. You know that I was very, very excited to listen all the information you gave us. Apparently, well, I may think that these are topics that are not related like 100% with companies or with international products, but as a matter of fact, I previously worked at marketing department, and these terms that you mentioned as FOB costs, as customs, and all the conformity, legal departments, and everything was something of my day-to-day, you know, like language and activities. I had to make pricing, and I have to be aware of the certifications for my country, for the norms, to make all the costs like accurate, and to identify like all the logistics and all these charges that I had to put to the product. So yeah, it was very interesting. So let's go
Absolutely great.
for the questions, and well, the
Yes.
first one.
Yep. So like if you like, yeah, and we can go through them very quickly, and because I'd like to because I'm sorry I took too much time, but and I'd like to take as many questions as possible, and maybe all the questions, and then so I'd like to answer relatively quickly. So you know what? Where can we get the book of Incoterms? I'll send you the link. It'll be easier.
Perfect. So you said that China is Canada's second main supplier with 13%, but you also said that this is not correct. Can you please explain who is the main supplier after USA?
Okay, so after USA, our first supplier is Europe. It's the European Union. If you add the European Union, before the UK left the European Union was the second trading partner before China. What happened is that the UK left the European Union, and so that's why it's a little bit different now. But so if you add the UK and the European Union countries, then you have the second place after China. So that's who it is. It's the European Union plus the UK if we add them all together. But of course, when we take out the UK because of Brexit, then they're not the second. They're third. The European Union is third. But if you add the UK, they're second.
Perfect. So is that true that all the imports and exports are required to have insurance?
No, it's the opposite. That's true. It's not a requirement at all. It's not compulsory. The thing is that it's highly recommended. And the reason why it's highly recommended is why I explained the notion of the carrier's limits of liability. So remember what that told us is that when something is lost or damaged, the shipping company never reimburses you. They only give you a small amount based on their contract. And that's why it's not compulsory to take insurance, but it's highly recommended for risk management, unless you prefer to take chances. If you're a gambler and you want to take chances, you could say, I'm going to take a chance and I will save the insurance money. Because insurance costs money. So you could do that. You could say, I'm going to take a chance. I'm going to hope for the best, and I'm going to save insurance, and I hope that nothing happens to my goods. And that could be one way of doing it. If you're a risk taker, you could do that. That's perfectly authorized, sort of, But then when something happens, then you would be having a big loss, and then might have to cry at that time. Who knows?
Yeah, of course. Oh, what are the limitations of the insurance?
Okay, well, that's too wide a question, but basically, there's three different clauses or types of clauses. One that covers almost everything, and then it's more expensive. It's called the clauses A, and then you have clauses that are more restrictive. For example, clause C, which is then cheaper. There it says that you're only going to be covered in case of total loss, i.e., if your entire shipment disappears or is stolen, then you're going to be covered by the insurance. But if if you're bringing 8 pallets of goods and 5 are stolen out of the 8 pallets, then you would not be reimbursed by the insurance, because that would be that would be a partial loss. So you see, that's the sorts of limits you have on insurance sometimes. And also sometimes there's limits on breakage of fragile goods. There's limits on perishables, and but so it is something that's very detailed that you need to look into, that I can't answer in 1 minute.
Yeah, sure. What happens when in customs your goods are opened or unpacked and get damaged? Whose responsibility is it that? Customs or shipping agency?
That's a very good question. In theory, it's going to be the responsibility of customs, but I think you may have a hard time getting them to accept responsibility, and you may only be covered if you have proper insurance. Otherwise, like these are the types of situations that are very difficult, and the customs will say it's not our fault, and the shipping agency will say it's not our fault. So that's also another reason why it's good to take proper cargo insurance, because then you're kind of fully covered for these kinds of situations. And there are some gray areas sometimes.
Yeah, can I import goods by myself, or do I need a customs agent mandatory?
Okay, so you can import goods by yourself. It's not mandatory at all to go to use a customs agent. However, it's highly recommended, because things like this are highly technical, are very technical, and you need to have a lot of knowledge. And also, you know, everything is done electronically now, right? And so that means electronically means very easy, right? But that's only in theory. It's very easy if you have all the correct information and all the correct codes and this and that. And so before things were electronic, it was very easy, because you could actually go to customs yourself with your papers and say, I want my goods. And then you could make it work that way. And discuss things with the customs officer, who would help you fill out the forms and this and that. But that does not exist anymore. You cannot do that anymore. It's compulsory to do all this stuff electronically, and it is very difficult to do that on your own if you don't have the knowledge that's necessary. And so it's highly recommended to work with a customs broker.
Perfect. What are the common mistakes of customs that you encounter?
Missing documents and sort of missing a certificate of origin, wrong declaration or misdeclaration on the description of the goods, and that lead to the wrong HS code, wrong value, you know, undervalued goods, and wrong origin. Like you buy something from a US company, they send it to you, and you declare it as US goods because you bought them from a US company. But then customs open the box and they see the goods have been made in India. And then, so that's the kind of thing that happens frequently, or sometimes.
Is it possible to change an Incoterm once the product is shipped?
I would say, in theory, yes, if there's agreement between both parties. You know, the Incoterm is agreed upon between the seller and the buyer. And so usually you agree on an Incoterm between the seller and the buyer, and then you have a contract, and then the goods are shipped. If you change it, it would be a bit rare, a bit original, a bit different. But I would say in theory, it should be possible, but only if both parties agree, you know. So you cannot change it unilaterally.
Okay. I was just curious, is that possible that the customs can hold a product due to disaster reasons?
I'm not sure what you mean, actually. I mean, customs can hold the product if it's not properly declared or documented, or if it's prohibited due to a disaster. I'm not sure what you mean. Can the product be held due to disaster reasons? During the floods in BC last year, then products couldn't be delivered. So but I'm not sure what's in what circumstance that would apply. I'm not certain of what you mean in your question. Perhaps while we answer other questions, you can rephrase it so that I can answer it.
Yeah, if the person that wrote this question could rephrase it, would be awesome.
Okay.
Which other countries are listed under the LDTC?
Okay, I am not, I don't know them all by heart because otherwise my name would be Wikipedia instead of being Christian. But basically, developing countries, i.e. generally poor countries or countries that have a low standard of living in the developing world. So in Africa and in Asia and some perhaps in Latin America, but they're mainly in Africa and Asia, you know, like Bangladesh, Burkina Faso, for example. And then that's what you find in the document that I showed you, the list of countries and the applicable tariff treatments. And that's where you'd find it in alphabetical order.
Excellent. Can you share the link of Incoterms where to buy the book?
Yes, for sure. I'll send it to Perla, absolutely.
Perfect.
And so just to clarify, oh, and I forgot to say something. For those of you who are nostalgic of paper, I mean, I am nostalgic of paper. This is no longer available at the International Chamber of Commerce. They only sell the electronic version. It's impossible to find the book. I mean, almost impossible. I have a few, but not many. And then but anyway, that's just for information. So you get you can only purchase an electronic version now. And you can also get buy a chart of the Incoterms book. I'll send you an electronic chart of the Incoterms. I'll make a note of it right now.
Well, for any food item, we need an SFA license, for example, chocolates, even if they are prepackaged.
Yes, absolutely. Whether a product is loose or prepackaged, as long as it's classified as food, you need an SFC license. The importer needs an SFC license. Yes, it's a relatively new requirement and it's compulsory, whether it's raw materials or finished products, whether you bring in cocoa beans from West Africa or chocolate from Belgium or Switzerland, you need an SFC license.
Perfect. And the last one is there any restrictions to export goods to Canada or from embargoed countries like Iran, Syria? Is there any paperwork to fill out?
Okay, so yes, that's a very good question. I didn't have time to talk about it, but it's a good thing to know. Yes, there are countries for which there are restrictions. So for example, North Korea, or for example, right now, Russia. And so there's two categories of goods or two types of situations. Some goods are prohibited. And then so there's a list of them. And some goods are allowed, but you need an import permit. And so where would you find that? It's on the Global Affairs website. Type in import permits or import restrictions or import embargoes or that's it. Yeah. So indeed. So for some cases, for some countries, it's all goods, and for some countries, it's specific goods. And also sometimes it's goods coming from specific entities, from specific companies. For example, there's a restriction on Venezuela. It's basically products that would come from companies that have direct links to Maduro, and or for Iran, it would be countries that are companies, not countries, companies or entities that have direct links with the Revolutionary Guards, for example. You know, so it can be quite specific, and it's either prohibited or it's allowed, but you need to apply for an import permit ahead of time, which is pretty easy. It's not a big deal actually, but you need to do it before you bring the goods in. And then once you get your permit, then you can import the material.
Well, perfect, Christian. Thank you. I think these are all the questions. We don't have questions on the chat. So thank you very much for attending. And for those participants that attend the event and would like to get a certificate of attendance, please send us a message on our Instagram page or email, and we will send it to you. Also, well, thank you again, Christian, for joining us and accepting our invitation. It was a very, very interesting webinar. I think it's one of the most asked questions because we're interested like how to bring products and everything, right? And
Yes,
insurance.
yes,
And I think it's
yes.
a very, very interesting, a very long, also very extensive topic, but
Yes.
I think people would love this.
Yeah,
Thank you very
I also would like quickly say thank you to Christian. Unfortunately, I missed the first half, but we record these webinars, Christian, and share them internally. And last time, because many students, they also do assignment based on this webinars, other instructors ask them to do. And last time the video was watched by more than 100 people. I'm sure this one will be watched by more than 200 people now. So again, thank you for your very valuable time and great presentation.
You're welcome. My pleasure. I'm glad that we had. Thank you for the invitation. I'm glad that we had interest and that we had good questions. And so it's nice. It shows that yes, there is interest, and these things are complex, and it's also sometimes hard to find the information because all the information is there on